we were talking about $1 trillion. Where were we? Oh, $124 trillion of great wealth transfer. Do you remember? Right. So this panel is actually on that topic. This panel, we're going to try to actually understand what's going on with this wealth transfer. And for some of the family offices that we have on this panel and some of the GPs that we have on the panel as well, how did they actually articulate what's next for this $124 trillion to be allocated? Maybe 1% of them will go to climate and frontier tech. Would it be nice, right? And so we have the honor to have a few of these people who are from both sides. So my first question, as an investor personally and LP into two funds, I really want to know, before everyone else, where are the next outsized returns? Where is it? Tell me, right? So maybe I will ask Martin here because he's the VC guy, right? So you should have a few insights based on the overall market and what we've seen with this new AI thing coming, the robotics, and still, some decent investment into renewable energies. Where are the next outsized return that you see for the next few years, Martin?
Well, I think you spoke about the massive wealth transfer. I think this is the other $1 trillion question, right?
It is.
So I think there's like maybe to address your question a little bit broadly. So I think there's a couple big things going on in terms of this wealth transfer. So one of the things is that if you look at family offices, they actually have quite a pivotal role to play. Because if you look at their allocation, roughly half of it, less than 36%, is actually in alternative assets, which is much more than institutional investors. And it's quite logical because typically families came from the business, right? So they have developed they make their money through a specific enterprise, and they're often related to an industry, right? They come from shipping, or they come from industrial. They can say something else. They came from. All right. It is this speaker, not the speaker.
The other speaker.
Okay, I'll just keep going. So I think what we see is those specific families, and especially the next sort of generation, wants to have return in both ways, but both financially. In a lot of cases, and that's our conversations we see with the next gen, they want financial returns, but they also want some other level of return, either return for their core business, or return on the impact side, or return on their own interests and what they want to do when they accomplish. So it's not purely a financial answer to your question. And what we see a lot is, they get excited about a specific space, so in our case, it is really, regenerative circular solutions in consumer value chains. And then we leverage, frontier technologies like AI and robotics to make actually the venture case. And what we see with family offices, they like to explore those themes as they're relevant to their specific businesses, and how they can have financial return impact, but also, get benefits for their core business in the form often of co-investment.
I want one secret insight. One.
Okay, so let me give you sort of a very concrete example. So the last two investments, well, one investment we did earlier in the year, and one we're going to announce this Thursday at a reassembly event. So I'll give you a little bit of a teaser. So the first one was as it relates to food waste. So in the world, 1/3 of all the food that's produced gets wasted. So think about the statistic, it's staggering, right? There's people going hungry, yet we throw away or lose food, about 1/3 of all the food. 20% of that is actually happening in hospitality, hotels, cruise ships. I think your gentleman is still cruising on Carnival Cruises. and catering. So we invest in a company that basically, before you throw the food away, takes a snapshot with sensors and AI, and then uses big data to recognize patterns. And allows you to give very actionable recommendations to these hotels and restaurants. 50% saving in 6 months. Massive ROI, but also massive impact, because food actually has a very high carbon footprint, roughly 10% total. But if you look at other planetary boundaries, like biodiversity, water stress, it's actually much more related to products and materials like food on this to energy. So it's one example. Another example we're going to be announcing is in the maritime, right? Like hulls of boats. If you have no drag or very little drag because there's no fouling on the ships, you reduce carbon emissions by 10 to 15%. Currently, what they do is put toxics on the hulls, anti-fouling paint. If you replace that by underwater robotics, massive savings, not just on the shipping, but basically any consumer good that can transport it. So that's going to be your next one.
Yeah, I'm actually quite bullish on the maritime transport too. And there's one of those companies here in the room, 12, who's doing SAF, but also about biofuels for maritime. And I think this is something I'm personally bullish. But anyway, let's the big guy talk first. So, Shenando, what is Rockefeller looking at next for the outsized returns that you can disclose?
Yeah, no, thanks for joining. So, well, first of all, I just want to build on something you said, which is that we're also seeing among our ecosystem players this desire to seek out things that are beyond just financial returns, right? And I think this sort of brings about the realization that there is a huge place for concessional capital, for philanthropic dollars that come from organizations like Rockefeller. And so I'm really happy to say that that is, looking at innovative solutions, looking at frontier technology solutions, that is something that I'm working on right now. And it's really exciting, right? So a couple of things that we're focused on right now, nuclear energy, right? Huge area of interest. And I'm sure there are many of you in here that are looking at that as well. Um, and specifically nuclear energy in the context of the global south. And let me go into this a little bit, right? Because this is important. So I was just in Kigali, Rwanda, over the summer, for a nuclear energy conference. And let me tell you, there is a significant contingent of African nations that are extremely interested in building out indigenous energy solutions. They don't want to have to depend on China for batteries and solar panels. They don't want to depend on Europe or the US or Qatar for natural gas and LNG. They want to figure out how they can they can successfully deploy modularized SMR reactor design in their own country so that they can meet their needs. Why do they want to do this? Well, for one, it's development. Of course, Rockefeller Foundation using energy as a development tool to help people lift themselves out of poverty is of course one of our focuses, but also it's to give these countries an opportunity to realize the sort of socioeconomic growth that they wanted to, economic growth that they've aspired for all these years, right? And enabling energy abundance through nuclear energy is one of the things we are spending a lot of time focusing on right now. Beyond just the technology bit, there's also a lot of work to do around building capacity, technical capacity, and otherwise building out capacity for personnel and training to operate and develop these facilities. And the last really is advocacy and getting public buy-in. Right now, there's still a lot of resistance to nuclear energy. Certainly within the climate space itself, still a lot of skepticism. And so these are all things that we are trying to address. And we see nuclear energy as a big unlock for many other downstream things in the global south.
I'm so with you. In fact, we don't have today Avalanche Energy, but that's one of our portfolio company. They were with us in the San Francisco event, and it's one of the very proud investment we've made. And I'm looking forward to see more of them. We had New Cube on the panel just earlier as well. So very interesting. So going back to Jim and Suzanne a little bit. So you remember when we kicked off that conference, we touched on the point that, pardon my French accent, by the way, everyone. We touched on the point that we had 15,000 family offices today that are recognized, and this number is going to triple to 45,000 over the next 20 years. And so these family offices, they of course, have their classic blue chip. I give the money to JP Morgan, they deal my assets, they deal with my portfolio. But now there is those alternative assets. And now there is assets beyond just the traditional suspect of Nvidia, Microsoft, etc., that are actually out of the United States as well. So when I talk to family offices in Singapore, they tell me that they used to invest specifically only in certain assets, and now they are looking at broader asset allocation outside of the United States as well. And so this is something that I think is important, particularly with the recent geopolitical changes, the different things that we see across China, the United States, etc. So for family offices like yours and for corporates who also are investing into the space of climate and frontier, what does that new world look like when you talk about allocating assets? Do you look a little bit more abroad? And if so, which regions and how do you deal with that? Because that's different risk. Maybe you don't have you have an outside potential return, but maybe you don't have that many follow-on investors, right? So how do you deal with that? Maybe Suzanne first with what your experience is with Salesforce and as a personal experience as well. Then we'll go with Jim.
Sure. I'm not sure this is working, but I'm Italian and I'm from New Jersey. So, poor
You-
older brother. So,
You're very lucky, but
hopefully you can hear me okay anyway.
we need you to speak on the microphone because we are recording you.
I don't think it's working.
I don't know. We're recording you.
Okay. Okay. Then
We're
I'll
recording
be
you.
less loud. Okay, got
Go
it.
go go.
So thanks for having me. Great conversation. I think from a Salesforce perspective, we think of the full capital stack, and we think of how do we drive impact throughout the company, technology impact, social impact, climate impact, and we think about the full capital stack. So we think about philanthropic dollars, to your point about risk capital. We think about venture dollars, and I'll dig in there a little bit more. We bought a company called Slack with a green bond. So we really look all of like across the company to say how can we drive impact in various areas through the full capital stack. As we think about our venture approach, it sort of comes and we're very long and bullish on AI, and that was the part of the conversation of the last panel. We're invested at the foundational layer. So, we have investments, for example, in Anthropic and 11 Labs and some companies that are that you likely heard. We're also thinking a lot about the picks and shovels. And so we're looking at energy, data center development. We're thinking about so we invested in Crusoe, which is doing data center development in Texas and sort of all over the world, moving super fast. We think about like monetization. And so, this is a new way to sort of buy for a lot of people. So we're looking at companies that are going to billing systems and consumption based, etc. So that's how we think of the picks and shovels sort of part of it. And then the last thing is around sort of the industries that are ripe for disruption. So education is one. I think AI is going to really disrupt that in a very powerful way. So we have some investments there. We've been doing some investments in energy, but if I think about the disruption, the older sort of market, like one company I'm very excited about is a company called ClimateX, which is sort of looking at the indexes, your traditional indexes, Standard & Poor's, Moody's, who really don't take into account the potential for AI disruption in their asset allocations and portfolios. So there's I think that's an industry that's pretty ripe for disruption as we go today. So just some examples of how we think about it and where we're putting our money.
And just on that, I just got the info that this microphone is indeed off, but the other one next to you is usable.
This one works.
Oh,
Oh, grab that.
thank you. Sorry guys for this minor technical issue. Anyway, so about the geographic split, are we talking mainly the United States, or also are you open to potential deal, let's say in Southeast Asia or in South America? What's the split looking like?
I think the answer, wow, now it is working. Largely in the US because it's the market we know the best. We have investments in Europe. We have a great team in Japan. We've recently hired somebody to cover APAC out of Australia. So we think globally. Our portfolio. We have hundreds of companies, 500 of companies in the portfolio, and I would say 70% of them are North America today.
I want an office tour. Can I have an office tour? Yes, one day. What about you, Jim? How is the I mean, your vision, just on Jim, you see a little bit more forward than other investors, and he really is driven by his belief, right? So he's been one of the first investors in geoengineering, for example, and into geothermal companies and things like this that used to be very key, right? First of a kind, and now everyone start to get that to the mainstream. But so for you, James, how do you see that in terms of risk management and also in terms of that geographical split? In your portfolio and maybe for the future investments that you would like to have?
Well, I think our focus is less about geography and more about major trends. I think the biggest trend could be described as the electrification of everything. So, in that sense, nuclear, solar, batteries, all of this is just part of things moving to the grid. And so that's been a major thesis for us, is just all dimensions of that. The other thing, if you look at data centers now, there's been a lot of hand wringing about how much energy they're using, but the grid needs massive transformation, and it's actually driving conditions for that to happen that wouldn't have happened without this, price insensitive customer that just needs power. Although it turns out the fastest, cheapest place to get power is from, virtual power grids and dispatchable power and software. The next fastest is probably storage. I've been a lot in US storage, like iron-based storage, and a potassium battery formulation, looking at fundamental chemistries. There's now something I'm seeing coming out of Japan. It's a vanadium battery that looks really interesting.
Vanadium.
The other thing that we are over in AI, although my favorite thing there is a company called Lemurian that's almost 2 orders of magnitude increase in efficiency on a chip. And I think the thing that's coming behind that may be coming out of Europe, the deal I've seen, I think, is European, is photonic computing, because we're running out of how we can move electrons in chips. The Moore's law in electrons in chips is coming to an end. So photons in chips is more efficient, and it also leads us towards quantum computing naturally. So those are areas where kind of the nexus of AI efficiency as the deep impact goal and profitability from rapidly changing technology all intersect. And that's the kind of sweet spot that we're looking for, regardless of geography.
Okay, so if I understand well, for both of you guys, you look at inevitable markets, and with those inevitable markets, you look at down the value chain, where are the optimization, the market failures that can be optimized, and that's quick wins, low hanging fruit, basically. And so you talked about this new AI data center era and thinking through the energy layer, thinking to optimize the grid first is an interesting potential outsized return investment. And what about the planet? What about climate? Are we not talking about climate anymore this year after the new government? Or are we? I need to be pushing you guys to your boundaries a little bit. So yeah, where are we on this? Where are the $1 trillion for the new grid for renewable energy? And what do you guys think of this? Do you see a pushback from your LPs? This is my next question, actually, because us GPs, we actually just, slaves of whatever the family offices want us to invest in. So going back to you, Martin, do you see that the LPs that invested in your first fund a few years ago still are keen on climate and energy, or has this push completely been diverted to AI now? And if so, how do you deal with that transition? Because you are locked for 10 plus 2 years, right, in your fund. So are those LPs pushing still for a more agreeable agenda towards climate than the change of administrations? Or are we completely at 180-degree now compared to last year climate week?
Well,
I will keep asking the question every year, by the way.
well, first of all, I don't hope to be a slave of my LP.
You're lucky, I am.
Otherwise, I'll have a slave driver here next to me. The second statement, maybe on that is, we don't have a very good reputation as the Netherlands in that whole slave history. So
Sorry, I think I
No,
can
very, very
I should
true.
not have used that words. I apologize.
But like to your point, like in the whole climate conversation, right? This has been going on for the last 150 years since Industrial Revolution, right? And I think we're now in a period where politically, in some pieces of the world, it's become less important. Yet I think this is going to come back full cycle, right? Because climate change is not going to, look at the political climate. And, at some point, I think the consequences will be quite pivot. And then we're forced into much more expensive repair operations. So that's my short version. And then maybe as it relates to our thesis for looking at products and materials, I'm with you, right? Electrification has increased massively. But if you look at the total carbon footprint, roughly 55% is related to all energy sources. And the remaining 45% is tied in how we use products and materials, right? How they're mined, how they're used, etc. Right? And a lot of these things are locked into the systems we build, right? So my favorite example is, biking versus cars, right? So, not only does a bike have, less materials than a car, but like if you look at the lifetime of that car, you have massive emissions that are tied to that choice, right? So a lot of these design choices of how we build products and materials have a ripple effect on the energy use they're going to use over time. And this is just the energy piece, right? 45% is products and materials. If you look at the other planetary boundaries, like biodiversity, 90% is tied to products and materials. If you look at water stress, over 85%. If you look at toxics, almost 100%, right? So the more we start focusing not just on the carbon piece, but all the other things that, we could live on a planet which is 2 degrees without animals, won't be a lot of fun either, right? So my sense is these are all inevitable things we just have to do, right? And frankly, like whether the political climate goes one way or the other, I think you always have to find, the coalition of the willing to embrace it. And frankly, the fact that it's less popular makes our investment strategy way more profitable. The first one was 2021. Valuations were sky high, alternative proteins through the roof, was all very trendy. Now is actually a great time to be an investor in the space. So I think we'll see in this cohort quite good. And then we have those robotics and those AI and enabling technology actually unlocking a lot of the solutions. Like let's take robotics and AI, right? A lot of these traditional things of repairing things, labor intensive. You take the labor out of the equation, suddenly you have massive amounts of new business models you can enable, right? So you have these big unlocks that you can leverage now against very attractive valuation because it's very unpopular. So I think it's actually a great time now.
I'm with you. Next, Suzanne, or I don't know if you want to pick up that question as well, but I'm with you. And what I see is two things. Number one, in our portfolio, some of the climate tech innovations we've deployed actually helps the data center infrastructure. So they actually make his clientele as well, and that's helping on the sales. But on top of that, I think that we've seen that hype in 2021, 2022 in climate tech. And of course, some of the tourist investors left. But look at you. The room is so full today. We packed. So you guys are legit. You guys are real, truly true investors, true believers. And actually, we never had that many people and investors in climate, in New York Climate Week than today. So I think there's a solid group of people, and hopefully the dry powder that is in some of these funds is going to rain to some of the founders here. And I thank you from the bottom of my heart if you're an LP and he's a true believer in saving the planet because there's not a lot of them, but a lot of them are in the room, and this is great, right? So maybe from Srinondo and Susan's perspective, if you want to share, because you also have this board to satisfy, and it's not the LP, but this is a bit similar, right? You need to answer with returns, and you need to show the numbers, right? So how did you deal with that, and did you see a big shift, or was it not that big of a deal? And yeah, I want to hear on your perspective.
Yeah. So look, the way I've been thinking about this is framing this in terms of outcomes, right? Whether you call it climate or you call it something else, the outcome doesn't change. And the other thing is, we are fortunate right now that we can use the surge, behind AI and data centers right now as an impetus, as a driver for creating demand for many of these solutions, which, by the way, have a huge positive externality for climate positive kinds of outcomes, right? And so that's kind of what we're dialing into, right? And right now we don't have to blare the climate message super loudly, and that's okay. But we're still doing the work. The work hasn't stopped. In fact, the work is probably accelerated.
Yeah, I think that's right. And maybe sort of the one corporate on the panel. We're one of our biggest customers is the federal government. So we had to change a fair amount of our language, particularly on the DEI side. We didn't do very much actually on the climate environmental side. There's kind of a sickening process, honestly, to go through, and our work hasn't changed. And the company was founded. I've been there my entire adult life, so 20 plus years. And we were founded at what we call a three-legged stool, which was a new technology model, a new business model, and a new philanthropic model. So we really try to keep the community as core, including climate, as part of it. So have we launched any new funds in the last 18 months? We haven't. We might soon, actually. But I'll say it's just fundamental to our business. So we're strategic, right? So AI, the biggest blocker to AI is energy right now, one of. So it's very appropriate for us to be investing in that area. And we're putting a lot of philanthropic dollars in nature. We're putting a lot of philanthropic dollars and in oceans and trees and AI acceleration. And we're talking about that. We're not sort of shying away from it. We've always had kind of a loud microphone as it relates to social programs in hopefully a positive way. But maybe the last thing I'll say is also it's just a good business. Like the two biggest risks to business right now are cybersecurity and extreme weather events. Companies are thinking a lot about cyber. They are not thinking a lot about extreme weather events. They don't know how to handle that. So for getting behind companies, which we are, that are doing Earth observation data in a very different, more accessible way, or thinking about, some of these solutions on advanced weather. So it's for us all one and the same. We're trying to drive positive impact in the world through both technology and climate and, social programs more generally.
I love what you said. Cybersecurity, extreme weather events. I wish someone in the room tweet that. Jimmy, you want to say?
Yeah. Well, being in New York this week, it feels as if the word nature has been substituted for climate as kind of a fig leaf, which I think is not a bad thing. We touched on a little bit that if you look at climate, there's three buckets. Energy is one of them. Food and nature are, bigger. And to some degree, food and nature are a zero-sum game. So I like the emphasis on nature from an impact point of view. I'm very interested in food technology, but I'm not. I'm frightened of how early it may be. We invest from the dash into some food technologies that we really like, because I think at a sort of huge level, energy is already in motion economically. In fact, it's gone faster than most people understand. And even in the US, we've crossed, I think, some tipping points. And so it doesn't matter what this regime tries to do. On nature, we're really in a tough place. And from an impact point of view, that's, biodiversity is the thing. It's the IP of the planet. It's what really matters in the long run.
And you are helping one of the first fund doing biodiversity action.
Yeah, I'm in a fund and some other companies, but it's again that comes out of the DAF. I like very much using philanthropic dollars to invest in companies we believe in. I think it's higher leverage in some cases, but I also make kind of a distinction about what we put where.
My last question to the family offices in the room. We touched on that 2 times today, that there's a lot new family offices that are going to emerge with this great wealth transfer. And I know even in our team, we have a few people who actually just inherited a lot of money from their family. And now they start to talk to the banks, they start to structure a family office for their own inheritance. Any tips or any, in one word or in one short sentence, like don't be scared or something like this? I don't know. Let's try to let's try to mobilize more capital, right? So I mean, it's easy to invest in Bitcoin ETH, right? So we need to show them something. So any tips to these new family offices that are entering the market of alternative assets and that are potentially interested to look at frontier and climate deals? Maybe we start with Suzanne first in one sentence.
Sure, I'll just go back to the full capital stack. Where is a loan appropriate? Where is a grant appropriate? Where is an investment appropriate? I think you can use funds in different ways for different things. So just being really intentional about that feels super important.
Hey, Jim?
It's good to be able to put together a portfolio of managers that have expertise and that know spaces you want to work on. And if you do have the expertise, it's a lot of fun to be placing money directly. SPDs give us a lot of latitude to do that now without taking huge bites of things.
SPV is a tip. What?
Well, I would say congratulations first.
On your inheritance.
I mean, I think it's a very privileged position to be in, right? And I would be, to your point, very intentional about sort of what you want to do about it, right, and what you're trying to achieve. Before you get too much wrapped up into all kinds of asset allocation models and financial spreadsheets and people warning you for all kinds of things that could potentially happen in the future. And then to your point, we've developed quite some very symbiotic relationships with families where, in addition to access to the funds, we work with them on co-investments, we help them, we advise them. So I think finding a couple managers in the spaces you want to get into and then, leverage their expertise is a really good way. And then, once you're up to speed and are comfortable enough, not just for the investing piece, but actually the hard work is often once you've made those investments and, there's, the investment piece is always a lot of fun and everybody's excited. But then you have to, a lot of these investments are there for 5 to 10 years, right? With the ups and downs and that's not always fun. So really think about whether you want to do that yourself, or whether you want to outsource portion of that.
That's a really great tips, because I have a few friends who just jump into that and they brought a big check, but actually that portfolio management, when pardon my words, but when shit hit the fans, you want to have people that will be able to pick up the call and potentially save your company. And fund managers, GPs, this is their full-time job, and that's something that is not to be neglected. Thank you about it. Highlight this one.
Yeah, I'll leave a couple of thoughts. So, well, the first is, to seek out and use the philanthropic community as a convening resource and as a knowledge partner. That's something, of course, we at the Rockefeller Foundation definitely pride ourselves on. But in terms of where to put a check, there's something we didn't talk about on this panel so far, but I want to bring it up, and that's power grids. This is really, really important. Power grids are the most unglamorous thing, I think, among all the exciting things you guys are probably thinking about. But it's a super important space. Jim, you brought up the electrification of everything just a little while ago. And look, you're not going to get any of these things unless you do something about power grids. really all across the globe. I mean, certainly in the industrialized world, like here in the US, but across the global south as well. Just one really fascinating statistic I want to leave you guys here with. I was in Delhi actually for some work earlier this year. There are parts of the city that are experiencing, and I kid you not, year over year electricity growth of between 12 and 14%, which is unheard of. To put that into perspective, before, 2020, before this, all the data center stuff, really, places like the US, Europe, we were seeing negative growth of 2 to 3% per year because of energy efficiency gains and things like that. But look, now you have in places like Africa and India, you have people buying ACs, you have e-buses, you have EVs, and of course you have all the industrial demand that's growing, adding to all of that, right? And so grid modernization is something we're focused on a lot. Yeah, encourage you to learn more about that. And there are a lot of good software startups in the space that are doing ton of good work there that we're partnering with. So yeah.
Here is my secret tips. Finally, thank you. No, because I was waiting for it. So apparently, just to summarize this panel, there is a lot of low-hanging fruits into re-optimizing the grid, and that can benefit both the AI data center robotics craze and the environment. So why not? Apparently, this is still a good place to be as a LP today to invest in frontier climate. You don't have to aim for moonshots. You can aim for companies that are actually tangibly making money through electrification, optimization, and others. Cybersecurity is something that we should all consider, particularly if you have a crypto wallet, but also extreme weather events. And so that's also good to know. I want to give a big round of applause to our speakers to have joined us today. Thank you.